morning, traders. Welcome to the TMT Stock Market Strategy video for Monday, August 29th. All right, well, the FOMC, Janet Yellen has spoken at Jackson Hole, Wyoming. They're definitely more hawkish than they were, and markets rallied, and then we had a clear reversal intraday. Very welcoming to see some selling coming in. Again, not that I'm a bear or a bull. But when you have the markets that are so complacent and not moving for the last 6 weeks, it's welcome to see some price movement. But we did have a nice big push up, and usually when you get that move, when you have the FOMC statement or minutes or even January, usually the first move is the wrong move, and that's just for the day. So what happens today, we have no idea. We're going to see what happens, but TMT sell model is getting closer and closer to a full-fledged sell signal. Right now, it's on a sell, meaning that we need some more evidence that the markets are ready to go down. But I'm getting closer and closer to a sell signal, a full-fledged sell signal. So we'll see what happens. Today is going to be pretty much key to see if we see some of these key support areas breach, which we'll go over on the charts. Let's get right to it. VIX, you could see here, beautiful indecision candle here. And if you look at it, we had to move lower, move up, and then we basically closed right there. And it's sad to see that the markets, they pushed them higher at the end of the day. It's again, it's not because I'm looking for a market to move lower. I like to see some price movement at these ultra highs, these highs that we've been sitting on. It's healthy for the markets to pull back a little bit, even 3-4%. And even if we went down to 210 in the spiders, guys, we're still in a big bull market. So I definitely see some cracks, but I'm going to show that to you again. So anyway, see the VIX. We're looking right at here, looking really close for a big breakout. We did not break out of the bands, but we're starting to move higher. We do have some positive divergence, and already on the daily, we're getting close to some overbought readings in our CCI, not necessarily in our stochastics or the RSI. Still have plenty of room to run. But look at this SPX versus the ATR. We're starting to curl up again to these very low complacent levels, meaning that we're so one-sided. Everybody's bullish, and may I add that the VIX is I believe it's one of the most heavily shorted since the VIX has been created, okay, ever. That tells me that if something does happen, a lot of these shorts are gonna really get taken to the woodshed, because the VIX doesn't move 30-40 cents. When it gets going, you'll see $2-3 and at the opening a big jump up in the VIX. So if you are short, be very careful, especially when you're at these complacent lows here. Next, let's get right into it. Bonds. I extended this descending trend line, and right now, so this M formation really has not planned out. This is better looking now as a descending trend line. We still need to take out the lower end of this trend line here. You can see we had definitely distribution coming in, and we have our RSI making lower lows and lower highs. So if gold goes lower, so does TLT. You're going to see that main target of 134 here in the TLT. But we still need to break the neckline here of this descending trend line. Okay. Next is going to be GDX in itself. We hit the 38% retracement. We're very close hitting that 50%. I like to see us probably get down to the 25. We're getting oversold on a daily chart, so that tells me we're pretty much getting close to a bounce. But I think that bounce we're going to get that bounce is going to get sold into. So I'm looking for that back maybe to that trend line underneath that uptrend trend line, and then fail. We take out this low, and I think we flush down to 25, if not even lower. Okay, but I am looking for spots to buy the GDX and gold and silver. Not yet. We're still not out of the woods yet to the downside. GLD, you could see that we hit the 23 to 38% retracements right here. And this M formation measures all the way down to 119. Let's call it 120, excuse me. So 120, no relief for our RSI and MACD, still pointing lower and lower here. Spiders, we get right into the indices. We're on our fifth wave decline. Fifth wave on our uptrend completed. So I'm looking for that. I mentioned that 217 and a quarter. We closed right at it. We were supposed to break lower, looks like, but then we went back up. I'm looking for that 216.50, 215.50, and 214.50. All right, so these are dollar increments to down. If we lose 214.50, you'll see the 212.88, and then of course ultimately that 210. And like I mentioned, 210, you're still in an uptrend. I mean, it's just insane that the markets are continually just being well bid up. But remember, guys, everything does come to an end at one point in time. We just don't know when that's going to happen. 60-minute spiders, I showed you this big bearish rising wedge, measures down to 215.88. We got pretty close to it, about 40 cents, 50 cents away. So still looking for that target to get down here. We'll see what happens today. It's going to be a wishy-washy day here. Anything could happen here, guys. You're getting close to the end of the month, and then we have non-farm payrolls and mutual fund inflows. So we could get a pretty good push back up again. But we'll see. Let's take it one day at a time. 60-minute, and again, here's our premium videos. Here's our ranges that we give you and provide you in our premiere video. Take a look at it on our website. Transports, this is getting ugly again, starting to break down from our horizontal line and our downtrend line back below it, just above the 50. We lose the 50, we get to the 200. Let's see if we can lose that 200 again, and then that is going to get us down to here, down to the 138.24 again. But if that happens, guys, I do believe that the fund managers will start to take notice of this. IWM daily, again, holding on to the 21 EMA. That next spot's going to be 121.60, and then of course 119.83. Okay, and then lastly is going to be the Qs. Now the Qs broke down on Thursday, and Friday just closed right above. But you could see all of this big indecision candles on all of the indices. If we lose that, look for the top of the 115 area. That's going to be your next spot in the Qs. All right, guys, be safe out there today. Definitely use your stops. Really important. Keep an eye on the transports. Keep an eye on what bonds are doing. All right. Remember, very important. And ultimately, keep an eye on that VIX. Very important. That'll give you some clues of what's going on internals. All right. Have a great day, everybody. We'll see you tomorrow.